Welcome back, traders. Today we are bringing two worlds, market profile and smart money concepts. The single print and the fair value gap may sound unrelated, but they both reveal the same thing, imbalance. Each marks where the market has moved too fast, traded one-sided, and left behind unfinished business. By the end of this quick lesson, you will know how to spot these inefficiencies and use them as a precise re-entry or as a reversal zone. So, what is a single print? In the market profile, each 30-minute time frame is a letter. So let me just show you here what it works. So this is the full composite of the market profile here, representing a full trading session, and we're looking at BTC on the CME. So A session will be the open of the market profile. So you have A session being 30 minutes traded. So when you look on the right here, on the candlestick, you can see that the same letter corresponds to the same open and the same candle. So again, in market profile, each letter represents the 30-minute time frame. A single print is a price level where only one letter trades, meaning no opposing auction took place. It's the footprint of initiative activity, buyers or sellers dominating so strong that price never rotated back. You will see them during trending days and after an excess tell, and that can be a buy or a sell, or as price breaks out of balance. Single prints shows low acceptance. The market moved through a level but never agreed its fair value. Okay, so it's super important. I'm going to remove the complete session and I'm going to just break it down to the overnight session and the regular trading hour session. And the reason why I like to do that, it's because singles are very typical and they will have very good respect during the regular trading hours. Okay, so that's going to be the New York open to the New York close and not the overnight like the Asia session, London session. So the white profile here, it's the overnight session, and the purplish profile here is going to represent the regular trading hours or the New York trading session. Okay, and to just show you what the single print looks like on the profile, you can see that on this session after the open, we obviously traded down. And at the value area high here, you can see that we traded through. However, if I zoom in, you can see that this blue shaded area here represents the one single print. And we actually have two single prints, one at 112,730 and the other single at 112,675. So this little box here, this little zone is the inefficiency of the single prints. Okay, I hope you can see that. Why do they matter? Well, single print zones act as magnets later in the session. When volatility fades, price tends typically to return to repair the structure and trade what it skipped. If value keeps migrating beyond them, they can remain unfilled not only for the session but also for weeks, confirming strong control. That could be the sellers or the buyers. If momentum fails, price's first target usually is that single print pocket, just like we saw earlier. So in short, imbalances invite repair. This is super key. And let me show you what this looks like when they get filled and traded too. So here we can see that we have that single print from the New York trading session. I'm just going to zoom in a little bit here so you can see it. And then we have the overnight session. Okay, and we can mark these on our charts. And you can see I've got one here already marked. And you can see that later we open the session, we repair that single print that was made during the regular trading hours. The overnight I tend not to count it, but you can see that during the regular trading hours, price went back to repair that inefficiency from the prior session. And then on the right here, on the normal candlestick chart, you can see the ICT Fair Value Gap, and that is exactly what price does. So here's the single, that's where it starts, and price comes straight back to that zone of inefficiency or a one-sided trade to be repaired. Okay, and I think I do have another one here. There you go. So this is what the fair value gap would be marked as. And you can see that we came straight to the bottom of that gap, which, fair value gap, which is where the single print obviously repaired that inefficiency. And with that, we go from the auction theory, also known as TPO, to smart money concepts. So in smart money concepts, the same imbalance appears as a fair value gap, an unfilled price void left by a displacement move. So again, just to mark those two same gaps, you have the top one here. So let's just mark it as a single, and you can see that price on the TPO, that's what it looks like. That's where the low of the gap is, the fair value gap or the single print. And on the smart money concept, by ICT, you can see that price then comes into the box during the overnight, this session, but then later during the actual RTH session, the regular trading hours, it then fills that single to the tick on this move. Obviously now when you move lower, you can see there's from the next session, we have another single that we looked at earlier, and we can mark that one too, and that one will be right on the midpoint here. So you can see that these overlap together. So what is a fair value gap? A fair value gap forms over 3 candles. In a bullish gap, the low of candle 3 is above the high of candle 1. In a bearish gap, the high of candle 3 is below the low of candle 1. Let me show you a bearish example. So here we've got candle number 1, followed by the imbalance, which is candle number 2. In the TPO, that will be the single print. And then candle number 3, which is like the confirmation. Right, so the low of candle 1, you can see there, is obviously higher than the high of candle number 3. So you have in between this price action here a gap. So if I just delete this and remark it so that you can see on like naked price action, so let's just zoom in a little bit. So you have candle number 1, candle number 2, and then candle number 3. So we want to then choose, you can choose a Fibonacci, just split the range, or you can choose a box. Many people use the box. So let's go between the low of candle number 1 and the high of candle number 3, and then you can just extend this forward until current price and just kind of like wait for that price to revisit. So here I can give you a little tip, and that tip is that we can then either wait for the key time. In other words, this test here, we know that it was done overnight, okay, on that overnight session. So if we just be patient and wait for the actual regular trading hours, and you may ask, but why wait for the regular trading hours? Well, because the single print was made during the previous regular trading hours. Therefore, we should wait for the next regular trading hours to then trade that same inefficiency. So in TPO, it will be the single print, and in smart money concepts, it will be the fair value gap. So we want to keep extending this forward until we actually get to the correct time. So you can see down here, it's around that 9:30 New York time, and that's when price comes back up to the bottom of that single print, aka fair value gap, and there you go, you can see, and price hits it and then reverse. So this is what it looks like. So it's a fast moving imbalance, one-sided overwhelmed liquidity. You can see by the magnitude of the candle, that impulsive move. The empty range between, okay, it's those candles shows that the market never traded efficiently. You can see it never traded efficiently there. So it doesn't have to fill the whole range. The bottom of the singles act as that resistance. So like the single prints, as I say here, the gaps are often the magnets. The market returns to fill them before resuming the trend. And this is exactly what happens here. So the market comes back up to the bottom of those singles, kind of like rebalances, and then resumes the trend to the downside, causing yet even more singles, as you can see here. So it's the same concept, different lenses. Let's overlay and compare them side by side, and you will see the alignment. A single print on the TPO chart almost always overlaps a fair value gap, be it on a 5-minute or a 15-minute candle. However, the 30-minute auction candle will typically offer the best results, especially when picked from the regular trading hour session. Both the singles and the fair value gap highlight where liquidity vanished and the auction skipped those levels, the inefficiency. The market profile trader will call it, or the TPO will call it, low acceptance inside the value or outside the value. And the smart money concept trader will call it an imbalance. It's the same phenomenon seen through different time-based versus price-based structure. So as I said, let's overlap and let's bring everything back together so you can see the overlay. So overnight, RTH, single print, candle number 1, candle number 2, candle number 3, and obviously the single print marked, and then the fair value gap. So you can see candle 1, imbalance on candle 2, forming the obviously single print in TPO, candle 3 confirming the move down, overnight session, not the correct time yet, being patient, waiting for the RTH open, and that gets traded to the single. Inefficiency now rebalance and price then resumes the trend. I hope this again is clear. Now for some tips and tricks. So mark the single prints on your profile during RTH. In other words, we want to mark the good ones. So like I did here, RTH, regular trading hours. So that will be 9:30 New York time. Okay. Confirm the overlap with the fair value gaps on your intraday charts. So you can then choose the candlestick chart and just mark your normal fair value gaps in between those sessions, okay, intraday. When price returns, watch the order flow. So if you're not very familiar with order flow, we've got courses on our website that can help you with that. But typically you want to be looking for the absorption or rejection. Absorption could be something like you have a lot of volume coming into the level. You have a lot of, for example, positive delta. And as price is just stuck there on that same single print, you can see delta coming in, volume coming in, yet price going nowhere. So you know someone is sat there with a limit order causing that absorption. So that could be like the continuation. In other words, price comes up, you've got those limit orders stuck above price, price is hitting that level, positive delta coming in, yet price not getting any follow through. That means the continuation setup, continuation to the downside. And the other one is the rejection, which means obviously that absorption becomes a rejection. It goes back above that level and then continues, and the shift then can occur where you go from a bearish to a bullish, or depending on what single print we're trading. If we're trading a bullish single print, it can go from then from bullish to bearish. In this case, obviously we'll go from bearish to bullish. So then this tip is very, very key. So above the POC or VWAP, you want to see that bullish continuation zone, okay? But below the POC, inversely below the POC and VWAP, you want to see the bearish continuation zone, or rejection zone. So here, what you can do is, I'm going to bring just the bars. Obviously, you can see them there on the right, but let's just bring the bars here. So I'm just going to click on here. Let's just bring the bars or candles. And what we're going to do, we're going to just add the VWAP from RTH. And we're going to anchor it at 9:30. There you go. So here's the VWAP. And you can see that price, when the market opens, is below VWAP. Okay, so this could be a filter. Obviously, we don't want to take longs while we're still below VWAP. So here, one confirmation, as well as the point of control. So the point of control from the previous session is clearly above price. So if I mark this here, you can say we're at 115, call it 100. So let me just go POC, and there you go. You can see the point of control. So below the point of control, below the VWAP equals bearish rejection zone. So only if we reject, as in that continuation to the downside, meaning get back above it, that's only when we'd be like, okay, that's not a good setup. But for now, we have to remain with that bias to the downside because we are below the point of control as well as below the VWAP, and we have the single print acting as resistance. And with that, we conclude our lesson on fair value gaps and obviously the market profile TPO single prints, where smart money concepts meets the market profile, or vice versa, where the market profile single prints meet obviously smart money concepts by ICT. So let's recap. Single prints, time-based inefficiencies from the market profile. Fair value gaps, price-based inefficiencies from smart money concepts. Both expose where one side dominated and liquidity was thin. When they overlap, that's confluence between two powerful frameworks. Those zones become prime areas for re-entry, retest, or continuation. Remember, different language, same message. Markets seek efficiency. So, thank you for watching. You know where to find us, chartchampions.com, and I'll see you on the next lesson. Thank you and goodbye.